All right, good evening, house. Good evening, family. All right, this evening I going to go ahead and drop my analysis on what I'm looking at, right? I'll drop my analysis on what I'm looking at. So with the way I trade, you can try to get the step-by-step approach, you understand? So for everything I said yesterday, I'm going to be showing you how to use them. But you just have to pay attention. Then if you have any question, do it to drop them on in the group chat, right? I'll attend to them as soon as possible. So first things first, like I said, we have to understand the trend of the market. The trend of the market is very important because if you just have the trend, you just trade along with the trend. It's just that simple. Excuse me. So and again, it's not only about knowing the trend, it's about get understanding the market structure. So if you know the trend most times is usually complicated, is usually hidden. But if you can pay attention to detail, you are going to understand the market structure. And if you understand the market structure, of course, you will understand the trend. If it's a trending market or a consolidating market. Like I usually advise, if it's a consolidating market, leave it. There are a lot of markets out there. All right. So for those that are new, you can see this is a cryptocurrency for now. This is a cryptocurrency. So the analysis we did the other time was forex. So this is cryptocurrency, and this is Ripple. All right, this XRP USDT. So we are trading XRP against USDT for forex in forex term. But basically, what we are doing here is we are trading cryptocurrency. We are either buying or selling crypto. Now, I don't want to go into details in this particular aspect, but let me give you a raw view of what we are doing here. There in cryptocurrency, there are what we call spot trading. Spot trading is the one you either buy the coin and hold for a long time. Then if you want to sell, you sell. If you want to buy, you buy. That's what we call spot trading. But there is an a option in cryptocurrency what we call futures trading or perpetual futures trading. So futures trading is more like forex, where you anticipate. You don't necessarily have to buy the coin, but you can anticipate either a fall or a buy. You understand? Then you trade with leverage. But when we go into navigation of the Bybit app, that will be very clear. But I want to show you how to. I just want you to get familiar with those terms, with the terms I will be using in the forex because that's also very important. Then pay attention, go use the app. If you spend time with the app, if you spend time like just looking at the chart, you see that most things will become clearer and clearer and clearer. Just try. There are demo accounts even in cryptocurrency. I think there are demo accounts. Yes, there's demo accounts even in Bybit. I don't know about um what's it called, I don't know about Binance. You can go. That's a new option. If you have Bybit before and you don't have that, you can just update it. You are going to get the option. You can start anywhere. Just keep trying and making errors. You get. There is no cause for alarm. So, but the main thing is try and get familiar with the concept, right? If you can get familiar with the concept, you are going to make a headway. So, like I said, first things first, we understand the market structure. Now, what's the market structure here? For this app, for this um video, we are going to be dealing with let's deal with uptrend. Okay, we have, let me change. I don't like this color. Let's use black. All right. So we have this is my higher time frame. Now is daily time frame, right? So we have an uptrend like this. This is a daily time frame. All right. So we have an uptrend. So we have higher high, higher low, higher high. I want to teach you how to understand what we call break of market structure. So we have higher low, we have higher high, higher low, higher high, and higher low. All right. So let me stop here. Now, the difference between this high, all right, this high and this high, the market rise. Abi, you can see the market rise from here all the way here. Then the market fell down. That's what it means that a lot of people bought here and the market was rising. It's just like the same way we sell garri. There are people now that are buying. Let's say a producer has only 10 bags of garri in a particular community, and because of its plenty at that moment, 10 bags, and people are buying one paint because it's still plenty. The garri may still be about, let's say, 500 naira. Now, the moment that bag now reduce to about 3 bags, that farmer will no longer sell it at that same price again. What will happen? You will increase the price to make more money. It will now be from 500 naira, you will now start selling 800 naira, 800 naira. Once the garri reduce to like 1 bag, you now hear 1,000. One for 1 bag is now half, you be hearing 1,500. It's just the same thing. The more people buy, the more it rise. You get? So this particular coin now, a lot of people bought here. Oh, it's cheap, let's buy, it's cheap. Yeah, it's cheap at what's that value? I think that's 250 or so, 0.225 cents. It's cheap. They keep buying, they keep guys, it's going to rise. Definitely the market will start rising, right? It will start going up. Now you get to this place, it's too costly. I'm okay with the people that bought here will now be like, I'm okay with the profits I've made so far. Let me go and do something with my money and all of that. Once they start selling, the market will start retracing, right? Now you retrace to this point, people are like, it's okay for me to buy, I can still buy. This market, the worth of this coin is supposed not to be at this value, they will start buying. You see the market will rise even above this, because 50 people bought here, 75 people joined here, it will rise. People that bought here will sell, there are people who join again. It's just, that's just how the market works. It will keep rising and falling, you get? Because people are, we are of different emotion. Not everybody will hold just to hold like that. People want to sell and do some or two things. That is why I see the market is always up and down. But people, if everybody that bought here should sell here, you see the market will fall back to this point. It's because people that bought here, not everybody sell. About 75%. That's why it's still hanging and lingering around here. And more people joined again, it went up. They sold, more people joined, it went up. That's why the market is doing like that. So now, on going to market structure, this is an option. Why is it not an option? It's rising, it's going up. So now, for you to understand market structure, what we call break of market structure. So the difference between this high and this high is this low. So this is the last low, alright? So I can call this now a break of market structure. We call it BOS, alright? BOS, break of market structure. Now, for this break of market structure, there is a place that a lot of buyers came in that made, instead of this market, remember, this market is falling down, alright? It was going down, it was going down. There's a place the market got to, and buyers now joined in very much, that now make the market now turn, instead of going down, now start going up and break the previous high it went, because this is a resistance. Let's say this is a random number. You all know that, let's say, okay, yeah, let's say this is 500. People that bought at, let's say, 200, they'll say, I want to sell at 500. That is a random number. So that 500 is now a resistance. So there is something that make this market break beyond the 500, which is a resistance where people want to sell, break beyond it. So that point where a lot of buyers came in is what we call order block. That's where the orders are. That's where the stacking orders that make the market change. So it's usually at the last point, because the market was selling, then change direction. So at that last point is where that's where the orders is sitting. So we drag it to the front, right? So it's called order block. So usually the market will return back. Once the market is coming back, it's returning back to where those orders are sitting, where that order happened. It will come into that zone. Then most times, usually, often times, once it tap that zone again, it will start retracing. Those people that bought there will buy again. That's just how it works. People that buy at 700, when this market comes back to like 750, it's around that 7 something, they will still buy. It's 760, they will buy. 710, they will buy. As long as it's in that 7 that they bought before, that make the market rise. Once it's around that 700 and something, 790, they will buy, as long as it's not 8. But that 7 is now a order block. Do you get? Most times, once the market comes into that 7 again, people will still buy. Oh, it was in 7 that the market rose up to that place. So, wow, it's now in 7, let's buy, it's going to rise again. That's how psychology of humans work. You get? They will buy. Now they bought and the market ruled him. Once they buy, because a lot of people believe now that 7 is now a random number that people the market usually gets to and rise. Once the market comes to 7 again, people will buy. It's not that the 7 is what making the market right, it's the reaction of people around that 7, 77 or 700 or something, that makes the market rise. So either ways, people buy, people, and a lot of people will still buy at that zone, which will make the market still rise above here. And let's say here is now, let's say here is 1000. 1000 is where people bought at, let's say 705, 700, 705 directly and sold at 1000. 1000 is where people that bought here will still want to sell at 1000, but because a lot of orders was sitting here, the market will exceed the 1000 and break structure to the upside. Alright, that is why we now call it break of market structure again. So once the market exceed, you see people have, the fear will now be like, it has exceed, it will soon drop, it will soon drop. The thing will definitely drop because of the reaction of humans. Once they sell, it will keep coming down. Now it will come down to again probably where the orders was sitting. A lot of people will now, the people now bought at let's say this is now 800. Alright, 800, let's say at 800 right here, the market will still come in here and tap into the zone, and you see the market, because of the reaction usually again, it will break to the upside. So this is what we call market structure, break of market structure. So what we do is, at a particular zone, we locate, once we have a break of structure, this is how we trade smart money concept. Once we have a break of structure like this, what comes to our mind is, okay, where is the orders sitting? Where are those orders? Where did these people place that much order that result to this break of structure? Because the market was supposed to keep falling, right? Just like the law of what's it now? The law of physics, right? The law of movement. A body will continue in motion except an external force is acted upon it. All right. So this market is supposed to keep coming. I don't know if I'm right on that, but that's all good, sha. So the market is supposed to keep coming down, okay, but got to a place and stopped. So got to a place and stopped. All right. So now that place, we now believe that once market tap into that zone again, it will still do the same thing. All right. So once we have a break of structure, we'll now locate, okay, where is the order sitting? This is where the order is sitting. That is the order where they place their order. We'll now go there and wait, because we'll now place our buy limit. This is what we call buy limit. I'm going to explain this. This is where we'll now buy and take it all the way to the next break of market structure. All right. So we'll still, once we have a break of market structure again, we're like, all right, the market is still an option. We'll locate the order block. This is the order block. We'll come here again. We'll place our buy. Okay, this is a sell. We'll place our buy still and to the um to the overall high. So this is how we trade market structure if it's an option. Now you can see the market is already falling down. What are we going to do? We already have a break of structure here. We'll now look for the other block. This is the other block. All right. So wait for the market to tap into that zone. Once the market taps into the zone here, all right, we'll buy. Come back again, tap into the zone, we buy. It's just as simple as that. But now let me bring to your notice how complicated this market structure can present itself. It's not as simple as you think, but let me show you so that you can be aware, to you'll be able to navigate through. Now let's say we have an option like this. Young man, wait now. Let's say we have an option like this. We have higher high, we have higher low, we now have like this, we now have like this, we have like this. All right, break of market structure, we now have this, we have this, we have this, this, we have this, we have this. Okay, let me do this. We have this, we have this, we have this, and this. Now you can see that this is complicated to an extent. It's not as easy as the one we just did, buy at other block. Now you can see that, remember, will you call this a change of character? Because you can see that this is the high, this is another high. The market will, instead of to close below here, that is close above this low, the market went down. So are you going to call this the market? Will you say that this is a change of character? Is a question. It happened here again. Will you say this is a change of character? Is a question. Okay, that's above, this below. Because if this happen, what we'll be expecting is, okay, since the change of character is there, we want to buy here, we want to sell the market here, because now we now have a change of character to the downside. What are we expecting? We sell here, and what did you see happen? The market will come, give you a good reaction off your zone, and you think that okay, the market will respect and come down to this place. What happened? The market will blow off. This is why you see that most people lose money. This is why you see we all lose money, because market structure can be very confusing. You can see the market will come in here because you already think this is a break of change of character. Market will come in, tap into the place, give you a little reaction, be like, oh my god, I'm making money, I'm in cash. What you think? What you see next is hit your stop loss, come back down, give you another change of character. Gives you another change of character. You think like, okay, another change of character. Let's just see the market is, maybe it has is okay, it's now fine. You place your sell there, like okay, your sell limit, your stop loss above, put it here all the way down. The market will come. This one is even, I think I was even nice with it. It will come like this, gives you small change, small money. You think you're in profit, pew, stop loss hits. So this is why you see it's as if we keep losing money trading forex. Now let me explain what just happened here. Let me explain so that in case we come across this, we can be able to discern that I've seen you before. So let's start from the beginning. We have break of market structure here, right? This is a break of market structure to the upside. Now we locate the order block. Where did this order start? Where did it start? Did it start here or here? That is another question. That's a question we'll ask. For most cases, the order block will start here. I will explain this order block of a thing very carefully. This low will be a liquidity. Now, what is liquidity? Before I go further. Now, liquidity is a scenario in the market to induce traders to take position, because now for we to buy, they need somebody to sell. So now if we need people to sell for us to buy, that means for the banks or people that are buying in a large quantity, they need other people also to go the other way around. So what usually happen is that they will try to manipulate the market, so you think that it's time to buy while it's actually time to sell. So liquidity is a kind of manipulation. Now you see that this low is a break of market structure. Now you want to take your entry here. Okay, this is a nice one, but it will come sweep your stop loss. Now once you buy and the market hits your stop loss, what just happened is that you've automatically sold. You now sold the market, but in a lesser place point that you bought. Do you get? So now you bought at 700, want to for it to rise, you bought at 700, but now your stop loss now is at 650. What actually happened now is that you sold automatically. You now sold the market in a loss. Instead of it to sell a bit higher than 700, you now sold lower than 700. So but automatically your stop loss is opposite of what you did. So they now have you in the other side that you bought. So it will now be like, okay, since you join the other angle, they now have plus one person saying you want to sell their position, for it to now make it equalizing for them to buy. I don't know if you get it. So now they will sweep your stop loss, and later on they will come and buy here. They will buy here, take profit all the way here. Most cases that won't be that's not what will happen. What will happen is that this is where the order block will sit. And the market will come tapping. But when you come here from with fear, maybe this thing has happened to you before, you want to take your profit here, your entry here, you put your stop loss here, your entry here, this is where you want to buy the market. profit here, you find out that this market will not come in and tap you in. It will just come here and move up. You will be frustrated. I buy here, you do not tap. I buy that place supposed to where you bought now. You hit my SL. What am I going to do? So it's just for you to understand when where the other block is. Is a very serious question. Where is the other block sitting? All right. Where is the other block sitting? So before I go further, for this case, this is where my other block is. I'm going to show you a live example. So now the market went again to give me a break of market structure to the upside. All right, this is a break of market structure. All right, what's happening? Okay, I think okay, I have it now. Break of market structure to the upside. Now, why is this the break of market structure? The difference between here now, okay, this is a break of market structure. Okay, so now the difference between this point and this point, this is the lowest point, right? Now, why will I not call this a change of character? Because now we also have another break of structure to the upside. We have a break of structure to the upside. Why will I not call this a change of character? Because this is a change of character. That means a change of market structure. Why won't I call this a change of character? The reason is this, and that's the reason why I choose to buy here. The reason is there is something we call imbalance and fair value gap. Okay, fair value gap is when you have an impulse. Let's say the first candle starts here. Let's use this guy. This is the first. This is one candle right here. Okay, this is one candle where you now have the dots and another dot right here. Okay, that is slanting. Where you have a dot right here. Oh, okay, you have this is a candlestick. Now you have another one right here. Okay, let me delete this guy. You have another one right here. You find this guy coming down this way, and this one going up this way. So these are two candles. Let's do one more. You have the third one. Now, for this set of candles, all right, for this set of candles, these candles are efficient movements. You can see that this candle started here and closed here and closed here. This next candle started here, went down a bit, went up more, came down and closed here. This candle did not just start here and go up. The candle came back down and covered the gap between this candle and this candle. So the gap in between, because if this candle should start here and keep going up, there will be space between this candle and the next candle. Let's say this candle started this way. Let's say this candle now started here. Oh no. This candle started here and just went up. Now, this is what we call efficient. This is what we call imbalance. You see the gap between here and this candle is what we call fair value gap. All right, that's what we call fair value gap because it's inefficient. The market the candle is supposed to come down and cover. But when we have something like this coming down, running from the candle, coming down like this, then that is no longer a fair value gap because the market is now efficient. So now this brings us to what we are discussing. This brings us to what we are discussing. This place is a liquidity when we have a fair value gap below that zone. All right, that place will be called a liquidity. I will call that a liquidity, not you, young man. Okay. Yes, that place we call a liquidity if we have a fair value gap here. Because now remember, when we have an order here, people buying so much here, what will happen? The market will rise with high momentum. Now, that rising in momentum will cause that imbalance where you'll be having a fair value gap in between because of the high momentum here. So this will be the order block because this is where they bought with bringing that high momentum. All right, bringing that high momentum. So this one, the other block, this other block above, this one right here, because people bought here also that make the market rise. This one will now be a liquidity. That's why you notice the market will come down, mitigate this place before going up. Now, for every, even for the market to sell, for the market to come down, the market leaves a order here because there's a point where the market was rising and people start selling. That is also a order block where people sold their market. So this is why you see the market will get to another block and retrace. But because the people bought here are excess, the people that bought here are much, are plenty than people selling. That's why you see that the market will just rise above. And most time people that sold here will also join the market here again, making the market rise the more. So now this is when this market now can um the market also can come back down, take out this point. This point will be a liquidity again for the market, only in one condition: if there is fair value gap here. All right, so this point is in an order block if there is no fair value gap between. Let's say the market is moving in an efficient movement here, then this point, this point, what is it called, this point is now the order block, because the market is always trying to cover out those errors, because those momentum, those fair value gaps are errors of the market based on high momentum, high order. So the market is always trying to cover up those order. That's why I see the market will retrace to cover up those fair value gaps, tap into the other block and go again. So it will come here. If there is no fair value gap here, why would the markets come down anymore? So this is why you see the market cleaning out liquidity. But I want you to understand something. The difference between here and here, the change of character will only happen in this market if, I won't call this a change of character. All right, even if there is no fair value gap here and the market comes down and close below here, this is not a change of character yet, because the difference between this high and this high is this low. So until this low is taken, remember we have higher high, higher low, the lowest point, higher high. So until this market close below here, then I can now call this a change of character. All right, so I just want you to watch this video again and get the concept about all this. So let's go into today's business. All right, so this is Ripple. Now this is daily time frame. First things first, what am I going to do? I have a break of structure to the downside right here. I have a break of structure to the downside, and I have a change of character right here. You all know how this works. Change of character. Right? What's the time? Okay. Change of character. Okay, this I want to put it above. Yes, so this is a change of character. Why? Because this is the high that put in this low. So we have higher low, higher high, higher low. Wait, higher low, lower low, lower high, then lower low. So the market is supposed to come somewhere around here. You can see the reaction. The market came here. This is what I just explained. Came here, went down, but because the order here is too much, just blew above. So why won't the market now stop somewhere here? You can even see that the market even respected. You can see this candle came in, went up again. You can see this small movement right here. Yes, I may just use that color. You can see that small movement right there. But why did the market not stop there? Because you can see the fair value gaps sitting all around here. You can see all the way here. These are fair value gaps. So this is what I just explained. All right, take notes. Just go ahead and watch this video again, and you will get it. Trust me. So I like keeping the charts neat. So where did the market go? All the way to where the order was sitting. You can see where the order is. That's where a lot of people came in and bought. So it's now my point of interest. So now I'm done, because now what I'm looking for is uptrend. I'm looking to buy now because this is daily time frame, my higher time frame. So I'm going down to 4 hour, nothing more, nothing much. Okay, 4 hour time frame. Now what happened? This is what I explained again. Remember this, look at this point. Is there any inefficiency here? Is there any fair value gap? There is no fair value gap here, so there's no need calling this my order block. All right, there's no need calling that my order block. This is now my order block because this is where the orders was sitting. This is where a lot of people came into the market that bought aggressively. You can see the movement, the rapid movement to the upside. So that is my order block, and I'm just going to extend it to the future. Let's drag it. You can see it right there. All right, all these points is now liquidity for me. You can see all these points, the market will take them out as liquidity. So but I like keeping the chart neat. So I'm done with 4 hour, but I will always have in mind I'm not going to sell for any reason. I'm just going to find a way to buy because my higher time frame is saying buy. All right, so right here, you can see the market is now in an uptrend. This is what I'm going to consider. I'm not going to consider the fall. I'm going to consider the rise. So right here, you can see what happened here. There's no any inefficiency here. This is where the order came and people bought aggressively. So this is where I'm going to put, sorry, this is where I'm going to put this is where the orders is. You can see the market tap into that place and rose. So this is the reason why here is not going to be an order. All right, but it's now going to be a liquidity. You understand? That's going to be a liquidity. The market rose again, giving us a break of structure to the upside. So for this break of structure, you can see this candle came down. So this is where I'm considering my entry right here. You can see this is a break of structure to the upside, and this is another break of structure to the upside. Let me go back to I like trading on the 30 minutes so I can get things in detail. All right, so this is now where my order is, because you can see after that break of structure the market retrace. All right, there's no efficiency right down there. You can see even the market came back down, tap into this one, cleaning up the inefficiency. You can see the momentum to the upside, took all of them out, came down, and this is where the next momentum happened. You can see that's where the next fair value gap is, as a result of people buying aggressively. All right, and right there we have a break of structure to the upside. Remember, you can see it right here. This is a break of structure to the upside. So where am I going to buy? Definitely is clear. This is I'm going to buy the market. So I'm buying here. All right, so where is my take profit? I'm going to go to 2 hours time frame because I'm looking to trade all the way up, right? So this is where I'm going to target. Let's go to 1 hour. Sorry, this is not where I'm supposed to use. Let's delete this. Let's go back to 1 hour. So this is equal high. This is the equal high. So I'm going to target this zone. That's my target. Okay, let's just take it down and the liquidity there. That's what I'm going to target for this trade. All right, 1 to 3. I like trading my trade to be 1 to 4. If I can get 1 to 4, or at least minimum 1 to 6, what's it called? 1 to 4 is my best option for any trade like this. So I will just go ahead. Yes. So this is my trade. Let me just go ahead to adjust this guy. Perfect. I like trading at a 1 to 4. All right. So this is my trade. This is my trade right here. This is my trade. This is my setup. This is my setup. Yeah. So this is my setup because this is now my liquidity. Let's go to 30 minutes and see how it looks like. Yes. Not that. This is it. This is my liquidity zone where the market will take out. This is the fair value gap. You can see the fair value gap right here. That makes that place, that confirms that place as a liquidity. So yeah, this is the trade setup for me. So I'm going to wait for this trade. Even if I lose this trade, then I know I am patient and I will learn, because forever, for as long as we are traders, we are all speculators. Nobody is 100% perfect. We are all speculating, because the market no send all this line where they draw. You understand? We always do what we want to do, but with pattern, we've come to understand that this is how the market works. Not like it always works like this, but for 10 trades you can get like, let's say, 7 and or 8 that are right. So if you are trading 1 to 4 and you're getting 7 right, that means it's a very good. Even if you get 5 wrong, 5 right, you are still about 75% in profit, so which is very nice. So this is my setup for the trade. Just go ahead and watch this video again, and I'm sure you're going to, if you have any question, do it to relate it to me. Comment it below or drop it at our group chat, so we'll continue from there. Thank you very much and have a blessed night. Peace.